All right, guys, here we are with another practice on the lines. Um, and this time, so we're gonna look at supply and demand zones. This is a very nice practice because I really, I really enjoy when I learn this about like supply and demand zones and the whole concept. It totally like made sense for me, and especially because I was already trading before, and I was like, why didn't I learn this before? So I'm glad I did. So I'll teach you uh, everything I know. So let's go. So first of all, right? So we're just using the lines here first, but we can see that we are having like some swing moves in the market: push, pull back, push, pull back. Yeah, you must have been tired of this already, of the structure sections. But yeah, so we're looking at a bearish move, bearish momentum, trend on the and the swing price action is bearish. So as I was talking on the overview on the intro section for the supply and demand, we use historical data to map our supply and demand zones. So what does that mean? Like this zone you see here, like back then, somewhere back in history, there was there was a reaction to this price area, this zone. So like back then, if we moved all the way back there, we would see some type of reaction like this, even if it was like a bullish move, and then we would see some reaction to this area. So first thing, how we spot these zones on the charts. So first of all, we're gonna be looking at like flips, right? Flip simply mean that there was a reaction to an area, you know. So like if price was going up here, you know, so each time like price reacts, this is a flip. So like there was a flip or reaction, and then that zone failed, right? So the same thing happened here. So price reacted to the zone, and then so the same thing happened here. So price reacted to the zone, and then it grabbed liquidity on top here, which we're gonna be learning on the next section about liquidity inducement and sweeps. So it came here and swept this high, grab liquidity here, which is like grabbing orders to fill the big orders here. And then at this time here, price grabbed all the orders that it was like sufficient orders to make this move happen, right? So like we were here, we had like a small reaction, then we had another reaction, and then we had a break. So what are we looking for when we are placing zones? So you're looking for like areas where price reacted and there was a break, right? If price just came here and broke like this, I would delete this zone because there wasn't enough like orders and there was enough like orders here and liquidity for price like to hold inside here and then react to it. So like this wouldn't be like a high probability zone for me to have it here. Okay, so continuing here again, price push down and then it react to this other demand. So when we are in a bearish trend, then we are reacting to demand, and when it turn up, so we will see like a supply here, and then maybe we're gonna have a reaction, another supply, and so on, right? So as of right now, price, we would say that supply is in control. Why? Because like we are in a bearish trend, so like supply is still in control. So here, right? Same thing. So price came here and reacted to this, and the reason because price didn't so after the reaction we had this break below the zone, which means that there wasn't enough orders here for demand to hold this area and to this for this demand to be respected and push price up again. So like we could have like we could even like have reacted to it, and price could have come like just inside this zone here, and then we would be like seeing like another move up. But instead we had a reaction, and there wasn't enough orders, and price couldn't hold like this zone, this demand zone couldn't hold price, and then we had a failure, right? So we had a flip and then a failure. So here we had, so now we're gonna start looking at like placing our zones, right? So first of all here, because we had a reaction and then we had like a sweep of liquidity, I'll just place this one here so you guys can see it. So we haven't studied the sweeps yet, but I'll just put it here so when you guys see it next time. Okay, so here, right? Now we have a supply area here. Oops, that color sucks. Let me just put it. Okay, so right. Okay, right? So after we had a reaction, price came here, swept this high, then we pushed down. So we had a reaction and a break of structure. This demand zone failed. So now we have this supply area. Okay, so same thing, another reaction. Price was ranging here, then we had a break. So this demand zone failed to hold price. So like when you see me going over the analysis, and when I said that like demand, like this demand wasn't respected, or like it couldn't hold, it's because there was a break. Even if it was just like a pip here below, I would already see this as a failure, right? So like I would just like ignore this zone. Like this is not a zone I want to be looking at for longs anymore. Okay, so again, so we had like this reaction, then the break. So right now, every time that price make the push that breaks structure, we're gonna be looking for the zone, for like the zone here, the newest zones and points of interest. It's where like the big orders were placed that cause price to break the structure or the zones, right? So here, right, we came here to this demand, and we were ranging for all this time. So like we were collecting orders for all this time, but right here, so like all the collection of orders and liquidity, price, whatever, money, whatever you want to call it, right here we saw that there was an imbalance, and you could see the spike in price came from here, this point here exactly, right? It could also have come here first and then come here, and then you would see the break here, and you would mark this as the imbalance, because this is where we saw the spike coming from. So this is where it originated. All right, so right here again we would have another supply area, and you can see, right, like it's still like, now that we learned the market structure, you can still see like the push, the pullback, push, pullback, push, pullback. And that's what I said. I don't remember which one of the sections that I said that, but like you need to be paying attention where price stopped. It wasn't just like whatever that it stopped right here. There was a reason, like there was orders, money, liquidity, like institutions, large institutions, they saw that this was an area that where was like a lot of orders here, that price react to it. And like a lot of people would think, oh, this is going up. But remember, we are gathering data. We're a stacking confluence. Like price, the swings are on a bearish move. And like, even though this could be a chalk, right? Remember? So this could be a chalk. But remember, like stacking confluences, this is still on a swing bearish move. Okay? So later on, I'll teach you and I'll tell you exactly what I mean about this, because like if you remember, I was telling you guys that this would be a chalk, right? But like there's a difference between a chalk and a sweep of liquidity, and then we're gonna see this later. So continuing here, we had the price, this area here, somewhere inside here, there was enough orders that push price. Then we had a break and a failure. This demand couldn't hold. Then we pulled back here, right? So right here, later on, we're also gonna learn that right here we would be looking for like 1 minute entries or risky entries, and then we could take, because we saw that price came from here, pulled back, and then we would look for a shorts on this area. Okay, so boom, again, price came here. It didn't react to the zone, but it just like it just reacted. Sometimes price, like, it's gonna be that this is a very good example that I just thought of because price will be like just going up, right? Like price will start moving, but like there's this point, there's this really strong areas where we need to be looking for these reactions and reversals, right? Like this wasn't enough order. This was not strong enough to make price reverse, right? So it just reacted and broke. But like, let's say, for example, here, right? I put this as a strong zone. So let's say that at this time here, this was a very strong zone, which made price give us a chalk up, right? Let me grab this guy here. So right here we had a chalk. Okay, so chalk here. So the same thing, right? Now what happened? Because this was chalk, now we have this demand, a new demand here, because price, even though this is a fractal structure break to the upside, price, it broke something, right? Maybe on the lower time frame, the 15-minute or 1 minute, there would be a reaction here, but it doesn't have to, because this is the first push to maybe just come back here. Remember, right? We are on the swing, bearish move. So like this can be like just the daily push, and this would be the 4 hours, lower lows, lower highs, right? So here, right? Remember, what is the chalk? The first signal that price may change. So after we saw this here, we could see like a new demand here. I mean, we would be mapping these as a new demand here, because price reacted to a strong zone, and then we had a change of direction. Okay, so I'll just be marking now the new zones that we found. Okay, the first one is already marked, and the second one, after price came here, right, broke, pulled back, and broke again. So now we have another supply area right here, because this was already mitigated. So if we think about it, every time there's a push and there's a pullback, so like when price comes to and enter these zones, we call that it was mitigated, right? So every time like price came here, oh, it mitigated this zone already. So like price, we made a push, pulled back, and it mitigated this supply. So what is the new supply, since this was already touched, mitigated? Okay, so this is the new supply, because it came here, and then now it's making a supply chain. All right. Okay, so I will start playing this. Let me just change the color of this guy here. Okay, I'll just change it to the green to make it easier to see. Okay. All right, guys, so I hope you guys are staying with me, and later on I will show you guys what you will be seeing on these areas that made the push. So, okay, so you have the chalk here. Now we have a fresh demand zone, which, okay, so like now we could wait to see if price will come back here, if it will react to this. If we're on the higher time frame, maybe the 4 hour or the 15, then we're gonna go to the lower time frame to see what's gonna happen, if the price will be respected, if this demand will hold price to make price go up from here, right? So let's say that like we're on the 4 hours here, and then we had a chalk to the upside. Price came to pull back to this demand, and then price and this demand held the price. Okay, so after this, we came back here. So let's say that yeah, price didn't get to there. Price we had this zone here, but price just came like made a small reaction here, and it just broke. Boom. Okay. So like what are we gonna do here? So like there was no reaction, there was no flip, which like there was no reaction to the zone, and price just broke through, right? So like we're not gonna be using this anymore. We can leave this area here if you want, but remember, right? Like on the higher time frame, maybe the daily, this is still just a big push, and price might just be switching to the internal bullish to come pull back. Remember, push, pull back. So it might just be like switching to a bullish state inside this, just to mitigate a supply zone to then turn bearish again. So let's continue playing. Maybe then here we would have, now we would have another demand here. Boom. And so this we would have to see because price stopped here, right? So maybe that was another like demand all the way behind, but I would also just mark this to make sure that if we're targeting, like we are entering shorts from here, then we would target these like 4 hour zone, for example, right? Let's say that we are on the 4 hour. Okay, so now we have this 4 hour demand. And guys, I'm just doing this as I go. I didn't plan how I'm mapping these zones and how price is moving. I'm just reacting to what I'm seeing, right? So like this, like I just made it up that price wouldn't go to all the way up there, because sometimes it doesn't, and that's what I would do. Like I would just like not even pay attention to this zone. It just broke through, and there was no reaction. So price could come here again, or maybe not. Like price would like just come here, make another small. Remember, it can't just keep going, going. We're not gonna map like every single higher high. That's not it, right? We use like high probable areas where like price, like we could see the push and the pullback, and price where it really like broke structure, and like where we really saw the spikes in price that made the market move. Okay, so here again, boom, we came back here. Let's say there was a very big push. So now if we use the maybe like the discount and premium price, so now we had already the push, and the pullback of the daily is finished, right? So here, so we would see like maybe like a daily's supply, and now we're seeing the 4 hour supply. So what we are expecting here, that this last demand would hold, because like let's say that this was the high. Let me just put here, let's let me mark this as the, like let's say that this was the daily high and this is the daily low, right? Remember, so daily high, strong high, which would be the strong high here, and the daily low, which will be the week low. And we know, let me put this back, and we know that this is the push and that's the pullback. All right, so let's say that this was the last supply area inside of this swing daily move. So this is a very high probability area that price should be, if price is to continue the bearish move on the daily, which is the, like remember the last section that I was saying, like the higher time frame will always be more important than the lower time frame. So like let's say that this was the last supply area to make this swing move continue down. So this is a very good area for us to look for shorts and start targeting these weak lows here, right? So let's say like price came here, the 15-minute, right? So now let's just continue on the forward to make it easier. So price came here, and then we just like try to break this zone again, and then price pushed down again. And then we would start, right? Like we would have a chalk here, and then we would start going down again. Boom. Let me just stop here for a second. So, all right. So let's just, because I just thought about something. So let's think that, let me see if I can do this, because I think I messed up. So let's say that price, it reacted to the zone, right? So let's say that this, when price came all the way here, before it broke the supply, there was a reaction, right? And now we have also, let me copy this guy here. Okay, so we would have a demand here now, right? So like you see, guys, that price like continues like this battle, right, of between supply and demand. It comes here, push, boom. It's like a ping pong, and it continues like moving and like going from area to area, and that's how you set up targets. That's how you look for reversals. That's how you see that price wants to continue because it broke and stuff like that. So let's look at this, right? So now we had price reacted to this zone. Let's change the example a little bit. So now we had another chalk to the downside here, right? So we had another chalk to the downside. So after we had this change of direction here, we can use this new supply area. Remember, like why are we mapping this area here? Because this was the area where price pushed to break structure, which was a fractal structure in this example here. But right now we would have a fresh supply. So that means that this supply is holding. So we are stacking the confluences, right? That because price, the 4-hour swing is bearish, the daily swing is bearish, and now we had like an internal fractal switch, a fractal change of direction to the bearish side. So daily bearish, 4-hour swing bearish, and now we had the 4-hour fractal bearish move. Okay, so here again, this would be either you could look for later on, we're going to be talking about the strategy, but here you could be looking for like a smaller time frame entry inside of this zone if you saw a reaction, or we could wait for the chalk first, depending how strong this move is. So like this would be even more high probability to take trades from here on this fresh supply, because we're stacking the confluence, like I said. All right. So, okay, guys. So this is another very good example. So now that price came here, we had the bearish chalk, and everything is aligned to the bearish side, right? So every time now that you see these demands, right? Here. So that means that these new demands are just going to be reaction points. Why? Because, like I said, everything is bearish. So if this is a strong zone, if this is a strong point and this is a weak point, so this should go, right? So this should be the weak area now. Like, it doesn't mean that you need to, you don't need to like hold, you could, but you don't need to hold price your shorts from all the way up there to all the way down here. You could maybe like, if you're getting in very early and if you have the heart to hold price all the way and to hold your orders all the way down here, maybe you start taking out like half of your position here, half your position there, and then your full position here, right? Or if you want, you can just you can just like go out here for like 10R because our strategy is super good. That would give us like a 8 to 10Rs just to this area here. I'm just giving you guys an example, but you see what I mean, right? So like, but because like price can come here, right? Let's say you went in a short there, price can come here and have a reaction to here, so like if you're going on shorts from there to here, like it retraced half of your position. So let's say you didn't close your shorts here, so you enter here, and then like if you were 10R positive here, then you would be like 5R positive. So like, do you have the heart to be holding this position for that long, or do you prefer just to get out here, and if there's another position here, you would enter on shorts again and stuff like that, right? So let's say, okay, now because this is a strong demand, I mean, not a strong demand, this is like a new demand, so we had another reaction, came here, maybe price just did like a small like internal structure, then we had the another push that was just like a buy to sell area, just a small one. We came here and then we broke everything again, and now we're done. So let me put, so this would be like a daily break. Let's see. Okay, guys. So you see like how everything aligns structure with demand and supply, like if you see it, right? Sometimes let's say this was creating like a flag, right? Let me just put like this. And then like let's say like this, there was a lot of like liquidity, like orders on top of this, like it was here, right? So price would come here, sweep this whole thing. Usually like people that trade the patterns, they would enter here, and then they would come here, like grab all the orders and then go down again. So I hope you understand how we map these areas and how it really, really, really help us to see like why price is reacting to like a zone, or why price stopped. Because if you're just marking your structure like this, like and if you don't have any zones, like any area that to help you understand why price is moving the way it moved, and why it reversed from here, it makes it so difficult. Because like just price action, okay, it helps, but like looking at this, looking at the zones, it makes it so much easier. And like I said, like sometimes like you want to enter on the break. Let's say like pattern traders, right? Sometimes they want to enter on the break of this equal lows here, but like price is still like inside of the zone, and it didn't, and it was respected, right? This was just a grab of liquidity to the downside, and let's say that where is it? So like people would enter on the break here, and then but like this zone like still was respected. There was not a break of this zone, so they would enter here, price would break the equal lows, and then we would have like a change direction to going up. You see, so you see like how important it is to see reactions to zones, to market structure, to like higher time frame structure, to lower time frame structure, to fractal time frame, fractal structure. You see like how everything aligns. And we haven't even got to the liquidity concept, which is another very very important tool. So just to finish this part here, we're gonna do a quick chart review as well. But just to finish this, right? So after we had the chalk, so like supply was holding, we had this change of direction, supply was holding here, we had another push, so there would be another supply area here. So like another supply, okay. So you see here, boom, price, okay, reacted to it, just made its internal structure. It didn't go all the way up. So like you will also learn on the liquidity concept that this is creating this is creating liquidity. This area is creating like pools of orders to later on, like price will come like all the way down here to come here to sweep these orders to go down again. Oh, my drawing sucks. But again, right, because we saw that from here price we had the break, boom. So this we have another supply area here. So you see, every time we see a spike, like even if it goes like from here, then price came there was an imbalance of orders and price like spiked from here, right? There was like a range and price was accumulating orders here, and then we had a break. So our demand is here. We had like a buy to sell, which is gonna be like a, well, let me try to draw this. And then we would have another candle like this. So this would be like a wick up and wick down, which in this case I did the opposite, right? It was supposed to be down first and then up, but you got the point. So like if we're going up, right? If we're going up like this, like on the higher time frame, you would see like this zone. And then on the lower time frame, on the 15, you would see like a range. But let's jump into this concept right now, because I want to show you guys something else. All right, let me just clean this up. Okay, so remember, right? So we were looking at the supply and demand zones. Let me grab this guy here because it's feeling lonely. So like we're seeing the supply and demand zones, and the zones are created when there is imbalance and the spike of orders, right? Here we had like a spike here, we spike here, we had a spike here. Okay, like you got the point, right? So let's jump to the next chart here. Okay, so remember, right? So like where we see the spike of orders, the imbalance, the push, like the origin of the push, you see like this very nice, well done paint here that I did. So okay, so here, like when you see the price that spiked, then like you're gonna see on the charts mostly in these three ways. I think these are the only three ways. And okay, so you see the spikes originated from in a form of a single candle, which would be this, an inside bar, which would be like, remember like that I showed you guys last time, that this is a side bar is simply like a pullback, which like on the higher time frame would look like this, in the lower time frame would look like a pullback and then a break and a buy to sell area. Okay, so let's start with the single candle, right? So the single candle, the thing that you guys need to see, I mean to learn from this here, is that the price that pushes the zone is created when like the candle, the next candle that pushed, it has to break the recent one, the previous one. Okay, so you wouldn't, let me grab this box here, you wouldn't grab like the box here. Why? Because this candle didn't break on top of that one, didn't close on top of that one, right? So you gotta have this the candle body close on top of this, right? So if you had just a wick here too, like this one didn't break on top of that, so you would have to see like a very nice push like this for you to create your zone. So instead of this one, remember, this is gonna look like shit, but so you see like this one didn't close, I mean this one did not close on top of that, so like this is not the zone. So what you're gonna do is come back here, boom. So you can see that this candle here, it broke and closed on top of this. So I hope you guys understand what I mean. And later on, also, we're going to be looking at refining zones, which we could use. Let's say if there was like a wick here, right? So oops, what did I do? So we could use like just a wick of this zone. Okay. So, and then what? Like we saw the spike, let's say, right? Just use this. We saw the spike. Okay, no, push, the pullback, and the spike came from here. Okay. And after that, we could see a price coming back here, right? To then give us an entry or a confirmation entry, and then we would see the spike again. Okay. Okay, remember, like this is the zones that we saw on the other charts that are like where the spike is originated. Okay, next one. This is this very simple one too, which is the inside bar, which is like it's very easy to spot because of the of the color, right? I just forgot about something here before I forget. Remember, guys, that if we had like a equal high candle here, like let's say that there was only like this push and this candle here. If we had equal highs on top of this, right? If like the candle was all the way up here, and if it was equal highs, this is an like also considered. Let's say that this whole thing here is just one candle. Sorry, I should have written this before. But like if this was just one candle and this was an equal high, like the whole zone will be like here, right? Because like this candle broke the candle. And remember what I told you guys on the fractal structure mapping. If like the equal highs or equal lows is the same as like this on the lower time frame, you would see like a small pullback and a push. Okay, like this inside bar is pretty easy to spot. And remember, right? Same thing that like this is an easier to see like price action, but sometimes we would see like a range, and then we would see like an inside bar here somewhere, and then a push. And this would also be the spot if there was one candle, one inside bar, or even like if we had like a range, maybe there was like a sell to buy, and then this would be the demand. Okay, and last one, so we can finish this. Let me just grab this guy. So this would be our zones. Okay, same thing, because like you'll see more of this type of price action when like the price is moving too fast on. You spot, it's easier to spot on the higher time frame this type of buy to sell or sell to buy. But like you see that price comes here and close with the wick, and then it comes here and goes all the way down here. Goes all the way down here, creating this zone, which on the lower time frame would be like boom, boom, boom. You see like buy to sell, and the opposite will see. This would be a sell to buy, and this would be a buy. You see going up to sell. Okay. And I just made this paint here on the bullish side, because it's the exact same if it was on the going down. You see, if it was on the bearish move, the same thing would happen. We would have this zone here going down, the inside bar. If it's going down here, comes to break, then price could come here and comes to grab more orders inside of this demand, and then go down again, and the same as the buy to sell. Okay, so I hope you guys understand the concept. I think it made it easier for you guys to spot how to map the supply and demand zones. And on the next video, we're gonna just go over a little bit on the on the on the mapping of the charts, so which is gonna make it even easier. Now that you guys know all of this, it's gonna make it easier for you guys to go to the charts and make your analysis. And remember, guys, it's a learning block. Every section, like from this, every section that we made, that we put together, is a learning block, and it was made like from to start from the beginning, and now you're getting more advanced with the supply and demand areas, and then you're gonna go from there. And later on, you'll see, okay, now I know market structure, I know the trend, price action, I know what a flip is, and I know how to set the zones, the supply and demand zones, which will be extremely easier to trade from there. Okay, so on the next video, we'll be going over the charts.